Good morning from Los Angeles. Hope you all had a great Thanksgiving, and probably some of you are chasing some Black Friday deals. I'm still dealing with the turkey effects of yesterday. I don't know why we get so stuffed on Thanksgiving, but good morning. Welcome to Power Hour. Markets just closed. I thought of doing a little bit of a different stuff today. Open the live stream up to whoever wants to come on and chit chat and talk about anything we want to talk about or they want to talk about. I'm pretty sure not too many people are going to be around, but here is the link for the stream if anybody wants to join from YouTube or what's up, folks. Here's the link. If anybody wants to join, you're more than welcome to do so. Grab it and come on. Let's see. What's going on? Slow day, slow week, short week. Everybody's chilling. Markets don't wait for anything. They move. So once they move, they move. And you still can't ignore short days and short weeks. Next week will be probably more active. But I'll go through my positions real quick, and then not much has changed on my end. Still 70% cash. In 4 positions, just got to hold those. Good morning, Doug. Yeah, I agree with you, Doug. I think it's age too. The older we get, the faster the year seems to go by. And when I was young, I was like, I can't wait until I'm 30, 25, whatever. And now I'm like, oh, wait a minute. It's going too fast. I agree. Hey, what's up, Buddha? What's going on? I saw your tweet. I responded to your tweet today. I agree 100%. But since you're so young, and I've been telling you all this time, you got to start investing, my man. Hey, the real Josh, what's up? How's it going? Good afternoon, SC Austin. What, in your opinion, are companies that are next in line in AI? I think you got to stick with the big ones because it's an unproven, even for the big names, it's an unproven. I mean, it's getting there, obviously, but let's finish with this first generation before we jump to the next generation of AIs. I think the next generation of AIs are going to be smaller companies. So the big companies, I feel like they're building the infrastructure and the backbone, and there's going to be offshoots. You know how in the old days, there was an app that was built for anything and everything. I think that's what you're going to get. You're going to get a lot of smaller companies building, not apps. App building becomes a minute job now, right? It used to take months before. Now AI will build you an app for anything you want. But once the backbone, the infrastructure is built, I think you're going to have smaller companies building smaller agents for specific tasks. I think those are the companies to watch for. But let's just deal with building AI first. Let's see how that's going to work out for the economy and society in general. I don't think it's going to be painless as Sam Altman or Elon Musk puts it. I don't think it's going to be utopia. I think I'm not a pessimist. I'm looking forward to it. I think there's going to be a lot of breakthroughs in science. There's going to be a lot of breakthroughs in medicine. If AI is used for good things, obviously, which I think it will, and there'll be brilliant minds building platforms off of the backbone of AI, to solve incurable diseases, hopefully, extend life expectancy. There's a lot going on. And but let's build it first. And I think the next move is going to be in companies that are working on AGI, but everybody's working on AGI. you know, from OpenAI to Grok to Gemini. I think Gemini has a clear lead, and I'm so thankful. I didn't even see that. I bought Google in my long-term portfolio for a completely different reason in April when the tariff crisis happened at 152. Stock is 320 in less than 6-8 months. And in fact, I saw some calls. I don't mind letting it go at 375 next May. I'm trying to get the long-term capital gain structure in there. But long story short, I think that's what I see about AI. Especially if AGI comes around. AGI is going to be smarter than 99.9% of humans on the planet. And then robotics are going to come around using AI or AGI. So there's a lot of offshoots of AI. We can't just look at AI. So hopefully I answered that question. Hello, Adele. How you doing? Hope all is well. How are Waymo's treating you up in San Francisco? I hear they're up to 10% now of all trips in San Francisco. And this definitely is having an effect on the Uber Lyft driver community without a question. And that's with limited scale. What will happen if they keep scaling, which they are? Can't ignore it, man. It's coming. It's not coming. It's here. They have 700 of them in LA. They're doing 1 million trips per week now in California alone. So that's 1 million trips less for human drivers. So that's one area that's going to get affected. Trucking for sure is going to get affected, for sure. And so we'll see what kind of societal change that's going to present. Not in San Francisco, not from what I hear. I see some screenshots that are cheaper than actually Uber and Lyft. But if they do introduce dynamic pricing on Waymos, they may be. But look, ultimately, they're going to be a lot cheaper because unit economics now are still upside down with a $150,000 Jaguar with all the bells and whistles on it. Doing $10 trips, obviously, is not going to cut it. But you know, technology moves. It's not going to wait for anyone, and the cars are going to get cheaper. The big number is going to be obviously with Tesla, what they do, because they're a vertically integrated company. They're manufacturing the cars. So if Elon can at some point come up with the robotaxi that he talked about, I don't know, about a year ago, saying cost per mile could be as low as 25 cents a mile. I'm certainly going to buy a bunch of them and call Uber and say, hey, put them on your network. Let me make some money while I'm asleep. Look, these things are happening, and either you go with it or you believe it, you don't believe it, you go with it or you don't go with it. You know, they're safer for sure, and they can work 22 hours, 23 hours a day, clean up, charge, and get out there again. That's what they're for, but we'll see. Well, you know, all this is moving really fast, and it's going to affect a lot of sections of work and society in general. Yeah, but you know, you got to keep trying because they're still, you know, have limited cars. I think they have up to 900 or 1,000 cars in San Francisco, and they will definitely be cheaper. In LA, they're cheaper. In LA, they're cheaper. Traveler, what's up with the bug eyes? How's it going? We don't talk about that shit here, bro. We're a finance channel, honestly. If you keep putting that up, I will boot you. We don't talk about politics here. Politics has nothing to do with what I'm trying to get the message out. Financial literacy is the most important thing that I'm looking for. Yep, there you go. Yeah. And I mean, it's going to keep getting better and better and better. I hear that Tesla is putting out free FSD for 30 days for people who have the 4th generation hardware. And most of the newer cars have the 4th generation hardware. I've been in one, few friends own it, and I was in one a year ago. Even from a year ago, it's a big difference, big improvement in FSD. I mean, Elon's going to compete in that space without a question. I mean, they're manufacturing the cars. They're collecting the data, like unlike Waymos. They don't have to map first before they can get out there. You can use FSD on a Tesla anywhere. And because it's a camera-based system, you don't have to map the streets before you put your driverless cars out there. For all of you who are, you think I'm getting off topic, I'm not. It's an investment idea. Obviously, Waymo is owned by Google, and I think they're way ahead of anyone. But then their scalability is going to be not as easy as Tesla. Once Tesla gets approval from look, there's a lot of moving pieces in this. The regulators are not going to allow these things by the hundreds of thousands on the streets. Obviously, traffic could get worse and things can happen. But my point in all of this is the next level of transportation. This is going to, I'm betting that a kid born today, not even maybe a 5-8-year-old today, will never own a car, and we will probably not get a driver's license. That's a fact. Transportation as we know it is about to get disrupted in general and changing. So, that's, yeah. FSD is good. It's going to get better and better and better. Welcome a day. Absolutely. I was just saying that a 5-8-year-old born today, even a newborn today, will never own a car or a driver's license. I remember how pumped up I was to get my driver's license, just to get in the car and like, no. I've been in probably a dozen of them in LA. Periodically I do it just to see if they have improved. They have improved immensely. I'm talking Waymos. And FSD has improved as well. So look, this is the future of transportation. You like it, you like it, you don't. There's still some people, won't feel safe or whatever. They still would want to maybe have a human interaction. But every time I get in, I'm like, this thing drives safer than me. It sees everything around it, 360 angle. Avoidance of accidents. Like accidents will still happen, obviously, but we lose 40,000+ lives in this country to traffic accidents every year. Imagine the productivity gain of that, right? Lives lost for any reason is a horrible thing, obviously, but traffic accidents take 45,000 lives. And my point in all this is it's going to be safer. Insurance industries are going to get probably disrupted. Look, there's a lot of moving pieces in this, but I like the space a lot. That's why I bought Google, because Google owns Waymo. And then not knowing that Gemini will be the leader in AI, I clearly think they are. I use a bunch of them. I use ChatGPT. I use Gemini. I use Grok. I think Gemini is definitely pretty far ahead of everyone else. And Google owns Gemini, obviously. So, and so investments are still going to be there. I mean, we need to pay attention to it. Like I have invested, I traded a couple of the Chinese Waymos, right? It's called WeRide and Pony AI. Uber has massive deals with both companies around the globe. They're launching in the Middle East. You have to pay attention to these things, right? For investment reasons, if not for anything else. And we traded it. Now I'm looking to get back in again on Pony AI and WeRide. Chinese are leaps and bounds ahead of the rest of the Europeans, actually, for sure. Maybe not as much in the US, but obviously they'll never be allowed here. But they make amazing cars. They make amazing EVs in China. NIO and Boyd and a lot of companies who you can invest in open markets through ADRs. Why not? Like, keep your eyes open, keep your ears open, keep the options open for investing ideas. That's what we talk about on this channel. And knowing that part of the industry and this part of the, obviously, finance really well, I see a lot of opportunities ahead when it comes to autonomous vehicles. Look, you can either join them or you can fold. I'm not known to fold. I'm always looking for opportunity to make some money. Financial education. What are the most impactful financial decisions, both bad and good, that you have taken? Great question. I like this kind of open topic thing. So I put the link. Let me put the link again if any of you want to come on. markets are closed, so we can do some shoot the shit. Here's the link. Here it is. Let's leave that question up there. I was always interested in finance, so I started trading actually commodities with a small account myself before even school, college, at like 17, 18 years old. We didn't have any of that stuff here, so I'm 57, going to be 58, so you guys can see how far back I go. And I was always interested in the topic, and I think it's in my blood. I'm told my grandfather was a pork belly trader in the country I was born, which is Turkey. I'm Armenian, but I was born in Turkey. Anyway, long story short, that was probably the best decision I made, that I started learning about it and had an interest at a young age, and went to college for finance, got my degree, got hired a day out of college by a small company, which then was bought out by Prudential Insurance, one of the largest insurance companies in the United States. And then we became their subsidiary, and I ran the NASDAQ equities desk for a long time. And, that was a great decision, to be in this industry and adapt and change and move forward. Bad decisions. Let's see. We all make mistakes. I've made mistakes. In fact, I can unequivocally and unashamedly say that I was 22, 23, and I blew an account. Yeah, I was on the desk too. I was working. I had built it up to like 300 grand. For those days, dollars is a massive amount of money for a 23, 24-year-old. And yeah, I thought maybe 26-year-old. I thought I was the shit, but the account was fully margined, fully leveraged, and literally in 3-4 day period, I got wiped out. So, and never since. But that was the worst decision I've ever made, and I very rarely now use margin. Very rarely, if at all. I don't remember last time I used margin. Margin is like a credit card that you just when things are going well, it's good. But let's say you charge up your credit cards and you lose your job. Now you can't pay. Now you're going to pay 30-40% interest. It's just disaster. And I see the margin. I see the margin totals going in over $1.2 trillion now. I don't know. I mean, once the selling starts, if there is a bear market ever again, which there will be, there'll be forced selling, and forced selling brings on more selling. All those margin accounts are going to get liquidated, and it happened in April. It happened last year during the Japanese yen carry, trade crisis. That was probably the worst decision. So the best decision is I had an interest and I followed my passion. I also went to 2 years of pre-med, actually. I was going to be a doctor. Then I'm like, bro, I saw that actually 40 years ago, 35 years ago. And I said, by the time I become a doctor, I'm going to be in student loan debt. I saw that then, and that's valid today. In these next 12 years, I can make 10x what the doctor is going to make the first 10 years of his career. So I was like, okay, cool, screw that. I saw that, and it also helped to have parents who did not meddle much with what I was doing, which was good. So yeah, the best decision is to get in the industry and stay in the industry and learn and blow an account, understand risk, learn how to manage risk. And the worst decision was blow a $300,000 account. In those days, dollars, probably today's dollars is $600,000-$700,000 account, because I was fully margined. And yeah, those are probably the two decisions, you know. Absolutely. Yeah. Well, I've been saying that on the other channel forever now, right? Don't eat out. Don't spend your money at Starbucks every morning. Take that money, invest, go into a dollar cost averaging index, and you will be so perfectly fine. Yeah, banks charge if you don't have enough deposits. And there are free checking accounts everywhere. Why pay a bank $10, $12, $15 a month? So you can have access to your money. I mean, it's the stupidest thing ever. But people don't know these things. That's financial literacy. They don't know. They don't look at their statements. It's right there in front of you. There's so many free checking account opportunities. Why would anybody pay that? I mean, it blows my mind, but then it goes to show that financial literacy is so bad that people don't know. Well, if you don't know, it's not your fault. But also not being curious about it is your fault. Not looking at your statements is your fault. It's clearly there. You know, to me, it's like stupid. Kids nowadays will not. Yeah, 100%. I mean, I have older kids. One is finishing first 4 year of college before med school, and the other one in high school. You know, he's a boy and he wants to drive. But I'm talking if you have kids that are 3 to 5 years old, I don't think they're ever going to have a driver's license. I don't think they're ever going to own a car. I mean, the car ownership is expensive, man. Even if you buy a beater, between insurance and maintenance and gas and you know, even if it's an EV, I mean, you have costs. So the point is, a junker today will cost you 500, 600 bucks a month, especially if you're in California to run. I think if transportation gets revolutionized, you push a button, a Waymo or some other, a Tesla or whatever shows up, that's going to drive you around for 25, 30 cents a mile. You can't run a car for cheaper than that anyway. You have no parking issues. I mean, look, the advantages are clearly there. They're safer, right? And yeah, I agree. I agree. Yeah, I fully understand that. It has improved quite a bit. It's improving every day. I mean, we have two camps, obviously. We have the Waymo camp with the LiDAR and radar and all those spinners and whatever. And then we have Elon with the 10 cameras on the car. I don't think it's going to be an either or. I think there is room for both. Elon's system is the only one that uses cameras for self-driving. Everybody else around the world is using LiDARs, but the cost of those items are coming down. So I wouldn't be surprised if at some point Elon adds a LiDAR to a Tesla. And they're becoming smaller and they're becoming more accurate. And yeah, look, I totally believe that's the future of transportation. So, totally. I do feel like I want someone in the driver's seat as humanized. No, but a LiDAR is seeing that at least half a mile before you see the deer, the last second and swerve. That's the advantage of LiDAR. It's 360 and it sees everything way before a human can even see it or react to it. And they're getting better. So, you know, I mean, you know, you have an FSD, right? So it's looking at 360 around you. And it's just going to keep improving. Cameras are going to improve. LiDAR is going to improve. All that. Radar is going to improve. Yeah, it's improving. Everything is improving. Absolutely. I use Gemini more than anything else. I used to use ChatGPT, the $20 version. Now I use Gemini's paid version. This latest version, I think, is 3.0. It's mind-boggling, especially what you can do with video now. It's just mind-boggling. You can literally put text and it'll create a video for you. I mean, I'm like, actually, pretty soon on this channel, Chris said, why don't we create an avatar for you and then do some AI videos? Although YouTube is not looking too friendly to AI videos, but I like the idea. So all you do is just create an avatar and feed it a script, and it reads it just like you. It looks like you, sounds like you. It's fun. I mean, yeah, Gemini is, I think, way ahead of AI, OpenAI. Why don't you guys grab the link and come on? Yeah, BYD, NIO, bunch of Chinese auto manufacturers. Amazing cars. Absolutely amazing cars. Yeah. I'm not against debt as much as some other, let's say, influencers like Dave Ramsey types. Like they go like any debt is bad debt. I disagree. Um, I think debt is the oil, like the engine oil. But if you overuse it, you're going to blow out the engine. And unfortunately, at the age of 18, banks start feeding you the plastic crack. Um, and people don't know how to manage debt, just like people don't know how to manage trades. Um, you know, once you get in that vicious cycle, because then you'll find a zero APR credit card, roll your balances. You can do that so far, right? At some point, they're not giving you all that because they don't think you're going to pay your balances off. I think debt, especially on the credit card side, like I'm completely against student loans, completely against it. Don't go to college if you especially if you're studying some subject or your major is in something that is not going to. I mean, again, we're talking today in different topics, but I would all encourage you to go to Federal Reserve Economic Data, look at what's happening. I mean, look, under the surface, economy is not doing well. So, yeah, indexes are making new highs, but under the surface, economy is not doing well. Unemployment rates, specifically in the college graduate cohort, go check out the unemployment rates. It's out of control. It's close to, I think, 26, 27%. Well, you just went to college, came out with a couple 100,000 student loans. Now what? They can't get jobs. This is without AI fully kicking in yet. Well, yeah, I'm against that. I love credit card debt as long as you don't carry balances. The banks are giving you a chance to float their money for 30 days interest free. I mean, charge it up, pay it off. Don't carry balances. But 90, and then again, look at the default rates and credit card rates. Look at the default rates in auto loans. It's through the roof. They're almost back to 2008 levels. So economy is not doing well. And since we're 75, 80% of our GDP is consumer spending, well, if they tighten the belts, what happens to the economy? And the markets are not factoring in slowdown, forget recession, even slowdown. Well, that's why Trump is pounding the table talking about lower interest rates. I don't think lower interest rates are going to help, honestly. The reason for that is, the Fed. But then I have a very different outlook for next year, and I decided on that. I'll talk about that before the year is out. But to give you a hint, I think Fed is about to lose their independence. If you thought they were an independent body, I think it's going to be Fed and White House are going to be just one, especially when the new Fed chair comes in and all the new governors come in. So basically, Washington is going to, or White House is going to be running the Fed. And that looks like to me more printing, more spending. I'm muting myself. Asset classes are, I don't think, short term, I think they may be in danger, but I think for next year, again, at some point, this is all going to end badly, but I'm not good enough to figure that out. Because we can't keep running these national debts. But then there are other things that they're doing, through stable coins. There's a lot going on, but you have to get into it and understand it. And maybe today is not the day, but I like debt. Manage debt properly is a good thing. But 99% of people can't do it. It's addictive, man, right? You feel this power. When you go buy something you don't need, it makes you feel happy. It releases some endorphins. Have a debit card instead of a credit card. That'll teach you. If you don't have it, don't spend it. Especially now that these BNPL companies are coming around. Well, they have been around. Buy now, pay later. That is an absolute disaster. Like, I'm 100% against that. Like Affirm, Klarna, I like the stocks, but oh my God. I mean, there are statistics that people are buying groceries on BNPL programs now. Like, I don't mind if you use BNPL, if you go buy a refrigerator every 5 years and make 4, 5, 6, 8 payments on it. Okay, I get it. You don't have the cash flow, fine. But don't buy groceries with that stuff. Don't buy food, or don't do stuff, essentials with that. Again, God forbid you miss a payment on one of those, right? Or you miss a payment on one of your credit cards. Yeah, manage debt properly. Properly manage debt, I think, is okay. I'm not against it. Absolutely. You gotta just take I know you drive, so take a peanut butter jelly sandwich or something with you. It's good protein. It's good energy. It's not easy being in the car 10, 12 hours, but, not only you're eating shit, it's unhealthy. And it's a sedentary business. You're sitting for hours and hours. So, and you will save money and take that money. Look, any meal these days is $10, $12, $15. That's $100 a week if you do it every day, and just one meal. If you put your Starbucks every morning, this, that, or your energy drink, $5 here, this, that, you're looking at $200-300 a week on junk food. F that. Take that money, put it in some index fund. And trust me, man, that's going to turn into some ridiculous amount of money. That's the fucking problem. What are my favorite go-to macro? Obviously, the most of the stuff, CPI, PPI, because I don't think inflation is ever going to go away. Most of the macro stuff that they put out is old, right? Even with the government open, and what they do, they revise, right? So most of the macro is not dependable. There's some live macro you can go, like ADP data for unemployment and stuff like that. But most of the data is old data, and they revise it the next month. So it's really not that dependable. But CPI, PPI, unemployment, obviously, mortgage defaults, auto loan defaults, credit card defaults. Those are the important things I look at. Obviously, you look at consumer sentiment, because we're a consumer spending driven economy. So a few things, but you can't create a thesis by because it's all lagging indicators, right? So the best future indicator is the price of stocks. Price of stocks somehow know, including indexes, somehow know if the economy is strong or not. At the moment, if you look at the indexes, we have a bifurcated market at the moment anyway. If you look at the indexes, all signs are green. Green means go. But if you look at the under the surface, things have come down. A lot of stocks have come down 30, 40, 50% already, with the indexes being at all-time highs. So there is definitely a two-sided market going on. And if you don't own the index, and if you own some of the underlyings that are like big names, Meta, okay, Oracle, all these big names, and you're getting smashed. Or if you own the UPS for the last 3 years, let's say, which I just bought in my long-term port, you're getting smashed. So, it's not it's not a stock market, it's a market of stocks. And stocks will tell you ahead of time. And the indexes will at some point will roll over because we have 10 stocks pushing the indexes up and up and up and up. At some point that's going to end. They're testing. They're testing in 30 cities, I think, and they're commercially available in at least 6 or 7. They're testing in all the major areas. Miami, they're testing. Philly, they're testing. They're getting on the freeways now legally in California, right? So, yeah. There's some going to be pushback, obviously, on that. Public pushback. And in blue states, I think they're going to get more of a pushback, because some city councils or states are going to be very critical of job losses. They're going to replace jobs. I mean, there's no ifs and buts about it. I mean, there's 6 million Uber Lyft drivers in the country. That's just those two for rideshare. And then you have small coolers now, with bug eyes are delivering food too. So I'm like, look, it's here. There will be pushback in blue states, I'm pretty sure, on Waymos. Like there was one in New York City, actually. I'm sure there'll be one in Washington State because they're going live. I think they went live already in actually 2 really bad weather places, it goes to show how much they trust the systems now. Like they're going to go live in Seattle. Seattle, it rains 300 days a year. If you guys notice, all the Waymos are in the Southern Belt where the weather is great. San Francisco, LA, San Diego, they're going now. Phoenix and Austin and Atlanta, right? They're all in the southern states where the weather is reasonable. But now they're going to Boston. Now they're going live in Denver. It's going to snow. So obviously they trust the systems that they're going to be able to handle bad weather. A few years ago, that was not a possibility. I mean, that goes how much they have improved, the hardware, the software, right? So, I mean, the thing is, like, one Waymo replaces 3 Uber and Lyft drivers. That's the reality. That's the reality. Yeah, it's insanity. Yeah. Yeah, Gemini. I mean, I'm an Android user, so for me, it's like a natural fit. I've always used Android, so that's another reason to use Android because I don't know where Apple is doing with their AI. I think they're going to go in bed with Gemini pretty soon, probably. But as they gave up on their own AI push, which I think is smart, actually. That's why the stock is doing so well. They don't have the capex. Look at Oracle, look at Meta, and look at Apple, right? Comparatively. Good morning, John. Broad Capital says, totally agree. That's currently a disconnect with something. Yeah, for sure. It's big time concern. Not personally for me, but I mean, you may know me from another channel or whatever. I'm very concerned with what's going on. But as an investor trader, price takes precedence. As long as the price is staying where it's at, can't question the price. Never, ever can question the price. I cannot eating by law because restaurants. I agree, 100%. 100%. They're giving you smaller portions for more money if the quality is not degrading as well. That's why actually supermarket stocks have done really well. People are buying, actually going because, buying food and cooking again. It's really expensive, man. I mean, I live in LA. You can walk into a Five Guys or a Habit or something, which is run-of-the-mill hamburger joints. You can't walk out with less than 20, $25. That's a lot. I mean, that's literally like if you're working for 20 bucks an hour, that's 1 hour of work for eating a burger. So I don't know. That's a lot. Yeah, for sure. Okay, folks, give me a minute. Give me a minute. I'm muting myself. So I was saying, a lot of people ask me, "What's that in your back?" This is my backyard. And actually, today is a beautiful day in LA. It looks exactly like that today. Beautiful sunny day, about mid-70s. I guess that's why we live in California, right? For the weather. Weather don't pay the bills though. Do you ever give thought that the current market would look like without? Absolutely, because all the stocks in the top 10 are AI kind of push, right? And but then there is another thing actually you guys can easily figure out. So as you guys know, S&P 500 is market cap weighted, right? Nvidia I think is 7.5% or 8%, close to 8%. And the top 10 stocks, or the max 7, is probably 40% of S&P 500 these days. If you look at an equal weighted S&P 500 chart, which you can find, it looks completely different. It's actually either down a little bit or flat for the year. But S&P 500 is up 14, 15% for the year, right? So there's your answer right there. Go look at an equal weighted S&P 500 index. It looks completely different. It's basically a flat line. Silenced wind. I wish I knew more about stock. Man, there's You got to start somewhere. So, shameless plug. Um, I launched my website about a month and a half ago. Thank you for the support. I really, really am doing it just to improve financial literacy in the country. You have to start somewhere. In fact, I had my niece they were here for Thanksgiving yesterday. She's 27. She's getting into the career world. And we were talking about it. And she goes, Uncle Serge, I call me uncle. And so we have respect still in our community. Beautiful girl. I'm sure she's going to have a great career. Reasonably smart. Not the sharpest tack in the toolbox, but okay. She says, I want to invest. I go, then you haven't subscribed to my website yet? He goes, what? Do you have a website? I'm like, what are you talking about? I told you that like a month ago. Oh, okay. So, the new generation a little bit. So you got to start somewhere. You don't have to be in stocks to create generational wealth. You just have to understand some basics. You have to understand the power of compounding. You have to understand Rule of 72. You have to understand ETFs. You have to understand DCA, dollar cost averaging. And so making the connection with the website, there's a free newsletter, completely free. I'm not asking you for Discord money, this, that. I don't need to sell anything. But I want to improve financial literacy. So there's going to be a lot more there. I'm going to start doing some webinars through the website. So go, first of all, subscribe to the free newsletter. You get one every Monday. And so far, there's about 11 blog articles. There's a blog on it. And start reading those. And they're not long. They're like 4 or 5 minutes, but they're the basics. Once you get the basics, the foundation, which I was telling her about last night, she goes, well, what if a stock I buy goes down? I go, you don't care. You're so young. But forget stocks, I said. Just ETF, dollar cost average. You start somewhere. You have to start somewhere. Those are the foundations of the house, your investment house you're going to build, investment portfolio. Once you do that, then you can move on to individual stocks. And first of all, you have to understand who you are in this investment cycle or investment world. Are you a trader? Most traders will not have success. That's a given. The statistics are 85, 90% of people lose money trading. Well, there's a reason for that. Because like today, for example, at noon, I have a call for coaching with a person. And that's the one-on-one thing I can do. But this free good information is really not out there these days. So I'm going to put it through the website, www.sergioavedian.com. Go subscribe to the free newsletter. Right off the bat, you'll learn. Now, I don't know what, and I do agree with the second part of the sentence. A lot of that stuff is confusing to me. Absolutely. Finance could get really confusing. Finance could get boring. Finance could get intimidating. Trading, investments. So even for me, as good a trader as I may be, I have drawdowns, I have this, I have that. But I have separated my play money, which is the trading money, from my investing money. That's what a lot of people don't do. You have to have a long-term investment account that you can accumulate wealth. You have to. Otherwise, you will never keep pace of what's going on in this country with what's going on, especially the gaslighting of the government and everything else that's going on. So have an investment account, start dollar cost averaging into ETFs, and then you'll, over long periods of time, time is on your side. And you just got to invest. Just ETFs. ETFs is exchange traded funds. In fact, there's an article about ETFs, one of the 11 blog articles there. Start learning, start reading, show an interest. But then I do understand it can get confusing. The language obviously is intimidating, especially if you get into derivatives and things like that. But I don't buy any of the stuff that, oh, look at me, I made $1 million in like 3 hours. I'm like, bro, that doesn't happen. It's just they're all bullshitting you on X or YouTube or whatever. Get real. And, look, they have a book that they're pushing or whatever they're doing. Oh, I'm selling puts, I'm selling calls. I'm like, bro, just get a life. But it could get confusing, but you got to start somewhere. There's no bad time to start. Basics of investing, and then you can move on. If you keep showing interest, you can get into individual stocks, and you can dollar cost average into an individual stock. If you dollar cost average into Nvidia, I mean, you'll be set for life now. And you see these trends don't happen like over 3 weeks. A lot of people chase that little 3-week trend. How about a 3-year trend? That's what I try to do in my investment account, investment port. It looks completely different. Trading account, options, all kinds of structural trades, all kinds of different trades, setups. Investment account, just buy and hold. Wait for a year and a day and hope you double your money. And so far, it's been pretty good. 2 years ago, it was ridiculous. Actually, my investment account ran laps around my trading account, and my trading account was up 120% last year. I got lucky with Carvana. I got lucky with Kava. They were 4 or 5x. I got out. After that, they went another 4 or 5x. Plus, you have 1 year, 1 day tax treatment, right? Long-term capital gains are a lot less than short-term capital gains because traders do pay ordinary income rates with short-term capital, gains that they're accumulating. Hopefully, they're making money. And the problem with that is if you have losses on the short-term account, trading account, you cannot put that as a loss and write them off from your long-term account, because from what I know, my CPA told me that again, don't take my word, I'm not an accountant or a tax lawyer, but short-term capital losses cannot reduce long-term capital gains. So I have 2 different accounts. I have an investment account you accumulate wealth with, and then have a play account. Nobody, trading is fun, man. Why not? Take some risk if you're young, especially if you're not your rent money. Most people put their rent money in there, which is stupid. Yeah, man, don't eat out. It's more. If you go get like I don't know where you are, but it seems like Philly, maybe, Boston, whatever. But in LA, you go get a meal, 5 guys, probably $25, and it's not like great. I mean, Gemini is best for me. Yeah, Gemini is incredible. This last 3.0 blew my mind, man. Just blew my mind. Well, I don't like that Sam Altman snake oil salesman anyway. But ChatGPT was great. I used ChatGPT for like 6 months. The $20 version, it was pretty good. Still decent, but Gemini, something happened with Gemini. In fact, the All In podcast boys have a interview with Demis. I forgot the guy's last name. Brilliant man. He won the Nobel Prize this year. You guys can go Google it on YouTube. It's on YouTube. I watched his interview. What an amazing human being. And he's the head of AI at Google. Demis freak. I don't want to look at my phone, but you guys will find it. It's on the All In podcast. Yeah, like last 3-4 months, all Gemini on my phone, on the PC. No doubt that it's way ahead now. How was my Thanksgiving? Usual. The weather was decent. We had 2 turkeys, everything you can imagine, plus some Armenian delicacies like chikofte, as you know, or some of you may know, as raw beef. It's like Armenian steak tartare or beef tartare. Cranberry sauce, obviously. I make a mean mashed potato, so we had, I don't know, how many people we had. The house was a tornado. Plus, my wife likes putting up the Christmas tree before Thanksgiving. And there's a ritual in the house that I'm getting too old for, but luckily my son is taller and stronger than me now, probably. So he can help with the storage of that shit. We have 3 Christmas trees put up in the house. 3. All the lights, all the, I don't know. I don't get in the way. I just kind of go, what am I supposed to do? Like, we do the heavy lifting, and then they do the decoration, and then but you have to put it away again every year. And like, but Thanksgiving was good. We had family over, strictly family. My brother-in-law, my sister-in-law, husband, kids. It was good. It's good. And after I finish this, I have a call at 12. My daughter says, well, at med school, I need one of those iPads. I go, okay. So we're going to go to Best Buy, and hopefully there's a sale on Black Friday. I hate going out on Black Friday. And John knows where I'm going. Porter Ranch, right? If we find some parking, we're going to go get her an iPad Pro with a stylus. I don't know how much those things are, but she needs it. She gets it. I said, that's part of your Christmas gift. No free meals in this household. Yeah, even it's unhealthy for you. Even if you're using promos, like, it's garbage, man. I don't know. I don't know about worse. I think it made it. I don't know. I haven't used ChatGPT. I have the free version of ChatGPT now, and paid version of Gemini. It's not even close for what I'm doing. For what I'm doing, I'm not muted, bro. It's green. I was muted. I figured that out, but I took it off. Still? Oh, the chat is behind. Oh yeah, chat. Oh my God, chat's like 12 minutes behind. Okay, cool. Yeah, man. Dollar cost average, triple Q, SPX, IWM, Bitcoin, whatever floats your boat. It'll work out. I trade, Stephen says. I'm profitable by learning. No, it doesn't just take hard work. It takes discipline. We all put the work in. It takes discipline. And to stay on that subject, a lot of people trade. They don't understand about taxes. They don't understand about slippage. They don't understand about commissions, because there is no free commissions. There's no free meal on Wall Street. So for every trader, this is my point. So what do you, for Stephen, let's say, what do you compare yourself to, or what is your comparison benchmark? For most people like me, is S&P 500. So S&P 500 is up 15% this year. If you're trading, you're not up at least 3 or 4x of that in your trading account, you should not be trading. Because by the time you paid your taxes, by the time the slippage, by the time the commissions comes in, and I don't know why you trade, you need to be 3x minimum just to be worth it for all that stress. So, but trading takes discipline more than anything else. I talked about that on this channel multiple times. It takes the 3 Ps: the patience, position size, and planning. Most people don't have the patience. They need to get involved. They're junkies. They revenge trade sometimes. They lose money and chase it and lose more money. But you have to have discipline. You have to have risk management. You have to have, those are easy things to say, but having been through all of those, and then you have to find out what works for you, who you are. You have to find who you are in the trading world. You can't be good at everything. Just be great at one thing. You know, some people day trade, which I completely don't believe. They could have success long periods of time. They can't have longevity. Maybe there's 5 out of 100 will do that, because the math is against you. 54% of the time, the markets are green on a day-to-day basis. If you take commissions and slippage, it's 50-50. It's a coin toss. I'm not buying any of these fucking day traders saying, oh, I make so much money day trading. I'm like, no, you're not. Because they don't put their accounts up. Just put your accounts up. Like, I put my account up. Today, after I do this, I'm going to go post my positions on the community page of the YouTube channel. Losses, gains, all is in there. But going back to trading, if you're not going on 3, 4, 5x of the benchmark, I think it's a waste of time. Is that an oxymoron? Is gambling stocks, you mean? Or are you saying is trading gambling? To a point it is, yes. If you don't do it properly, it definitely is gambling. Gambling stocks, you mean? I'm hoping. Like DraftKings and things like that? Or Vegas casinos and stuff? DraftKings had a pretty difficult time this year. It's been in its own bear market. I don't know what it's done last month or so. Yeah, I mean, Hood has big gambling going on now, right? Robinhood with the sports betting. You can bet on 1,800, 2,000 different things, I guess, right? I think so. I mean, look, gambling is always, you know, I don't know what Las Vegas Sands is. Wynn is. I think Wynn has done well. Yeah, okay, it's okay. I'd rather not. I mean, there's other things that I can do. So I'm going to talk about that actually a little bit today. We love gambling. Yeah, you will blow account after account. Good luck. Okay. Yeah, they're pretty consistent in and out. Although you need to eat a double now to get any flavor of the meat in there. They've gotten thinner and the prices have gone up. Well, I don't know what Hasabi is. Yeah, chikefta, yeah, for sure. My sister-in-law makes a mean chikefta, bro. So good. He wants an apple. Okay, my whole household is apple except me. They all have apples. I enjoyed. I've always had enjoyed. I'm gonna look, obviously, but she needs it. She has to have it, so I'm gonna get it. I mean, I think they do have it, some sort of deal on apples at Best Buy. I mean, online, what are you gonna save? Another $50? Like, change to live chat. I don't know what that means. ChatGPT really works well on making emails. Yeah. Gemini does it great too. But Gemini has like a polish button. You write your email and then click polish, and then fucking thing looks like Pulitzer Prize winner wrote your email. You can change. I think you can train ChatGPT more for who you are. It'll start learning who you are, and you're prompting correctly. It'll write more like you. Because when I do write an email and polish on Gemini, it comes out that most likely the receiver of the email is going to say, this guy didn't write this email. But I love that polish button. This is awesome on Gemini. Oh, no wonder I'm behind in the chat. The only problem is, yeah. I mean, well, Christmas is coming up. I'm sure there'll be some deals. I just want to say, hey, man, always welcome. I have nothing to prove, Stan. I know your name, so I'm not in a pissing race with anyone. I'm not young. My reflexes are still as good as it was. My reflexes here, not my physical reflexes. I think I'm as good as I ever was. So my intent is financial literacy. My intent is to close the wealth gap somehow. And how does that happen? With proper information and education. We'll trade my style. Yeah, and bankroll is important, obviously. With limited account size, you cannot do certain things that I do. Sometimes pay off, sometimes don't. But How often do I stream? I stream 3 times a week, and once for my members on Wednesday afternoon. So I stream Monday, Wednesday, Friday, trading with Sergio, Monday at 10 a.m. Pacific, 1 p.m. Eastern. Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern on Wednesday. And Friday's Power Hour, 10 a.m. Pacific, 1 p.m. Eastern, if I don't have anything else going. I'm pretty consistent with the live streams. And you can watch the replays on the YouTube channel if you cannot catch it live. Obviously, with live, there's more interaction. So I put the link up. Let me put the one more time because I'll probably be here another 20 minutes and then I'll go. Here's the link. Actually, it's too late for the link. Link is up there. So we went through the questions. Let's go through the positions. Same positions as I had all week, pretty much. Not much has changed. Markets are closed, as we know, early. So we'll come back on Monday to fight again. So what do we have? What's going on? Pretty decent day. Pretty green, nice green day. They melted up S&P at the end, it looks like, which is fine. We'll go through some charts as well. So I have 4 positions. ASST, I have 700 leaps going out to 2027 January, 400 of the 2.5s, and 300 of the 5s. All tied up, not tied up, but all kind of different things I'm doing with BMNU, which is the 2x ETF of BMNR. Actually, I have 2-part video coming out on the 2x, 3x ETFs. Please check those out. One is coming out on Monday, one is coming out on Wednesday at noon Pacific. A lot of people don't understand these things and they get slammed. So, long story short, I'm long 3,500 shares of BMNU, but I am short the 8, 9s, and 10 calls going out to December expiration. So I got 3 weeks to go on those. And I'm also short 511 and 611 strangles on BMNU. I tried to put on more strangles today. The market maker was fucking around. So I go, I'll get back to you on Monday. I want to put on more strangles. Like I want to put on more 515, 616s, short strangles going out to December for about $1 or so. I would not mind being short BMNU after I get called away, obviously. If I get called away. If not, then lower my cost basis. My cost basis is 778. For some reason, Thinkorswim is not adjusting for the. I got assigned last Friday at 10, 8, and 7. The 10s I had taken in $2.30 for a naked strangle, and somehow it's shown the price $8.91 cost. I'm like, nothing correct, but it is what it is. I know what it is, so it's reflected in the account equity, so I wouldn't worry about it. I'm long 5,000 shares of BZAI, small AI company. Pay $243 for it. It's $250. And Sharplink Gaming, I'm long 210 of the January 15 calls. That's it. That's what I have. About 70% cash. The other thing I'm going to highly recommend for all of you to start doing is, obviously, most of you will have some capabilities of running scanners. So with Thinkorswim, you can do this. With Robinhood, you can do this. I'm sure with every brokerage, you can do this. So this is my 52-week high list. Okay. So when the markets, so one thing I agree with Jim Cramer is, who I keep saying, which is true. Jim Cramer has blocked me on Twitter. I don't know why. I'm a nice guy. Anyway, you create a 52-week high list. Okay. Jim Cramer always says there's a bull market somewhere. Well, there certainly is. See, look at this list. These are all stocks today making 52-week high stock, 52-week highs. So create a watch list for yourself with this list. Because even if the market's going down, you still have stocks hitting 52-week high list. And a lot of people are stuck on the same goddamn names. BMNR, on X especially, Open Door, ASST. I'm in those couple of those, but I mean, limited risk downside trades. ASST, HIMS, Hood, Palantir, NVIDIA, all that shit, right? I'm like, okay, I'm a huge believer in buy high, sell higher, as opposed to buy low, sell high. And this is going to help you guys a lot. So create a watch list with stocks that are making 52-week high list, because you would be the most unluckiest person on the planet if that new high you bought is the ultimate high on that stock. It's almost impossible, okay? And you update that list, and you set some alerts, and those are stocks that are trending up. And most of you, I know, only buy things. You guys don't like going short. I like going short. So I also have a 52-week low list, which you can create and short those things, because those keep making lower lows, lower highs, and these stocks are going higher highs, higher lows. Uptrending stocks, downtrending stocks, basically what 52-week high and 52-week low list gives you, right? And you can do that on Robinhood. You can do that in Thinkorswim that I used, my platform. I'm pretty sure you can do that everywhere. So why not? There's like 100 stocks today on the 52-week high list. Why not? Go with the trend. For example, let's go through a couple of them. And I have set my filters in a way that nothing under $2. Small, mid, and large, and mega cap, as far as capitalization is concerned. Volume for the day, or dollar trading volume for the day over $500,000 minimum for liquidity. And you set your filters, simple filters. And obviously on this one, I have simple moving averages set up. Bid, ask, last, net change, simple moving average 20, 50, 200, RSI, and volume and money flow. You can set it up any way you want. Long story short, so let's look at some of these, right? And then look at the difference in other things. And the other thing this will get you is, by the way, this will get you rotation, because when money always rotates. Money is never sleeping. So this list has been full of gold miners, healthcare stocks, and then even the difference between healthcare stocks to healthcare stocks, right? Why not stick with ones? Like another big name on social media is Oscar Health. Well, Cardinal Health has been on this list forever now, and we'll go look at the two different charts, right? Oscar is struggling around. It was down all the way to 13, it's up to 16, 17, while the other one is making higher highs, higher lows, right? So go with the trend. And this will give you the discipline to go with the trend, as opposed to wait for things to pull back and blah, 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 blah. So let's go look at a couple of names. So this is ADI, analog devices, right? Okay. Here's the daily chart of analog devices. So if you look at this chart, it looks pretty goddamn awesome, especially the last few days, right? The breakout is happening if you're a technician with good volume. And that's one. Okay, let's look at a couple of other names. Armin. See, look at that chart. If you look at that chart, going from lower left, upper right, now accelerating, beautiful, making new highs, 52-week highs. This has been on the list since actually 11. Now we're up to 1448, right? But this is an uptrend. You can trade these a lot easier, and that's where the money is going. So it's going to give you a much better idea of where the rotation is happening, where the money is going. And then so you just go, don't waste your time with the stock like HIMS, let's say. And here's HIMS. Look at that chart, look at this chart. Solid downtrend versus solid uptrend, right? So my thing is, make your life easier. Trade 52-week high list and create a watch list, set some alerts, and on pullbacks, right? You can buy these, because these uptrends, this stock has been in an uptrend since it's $3. and now we're up to 14, right? And not too many people probably know it. It's called Aris Mining Corp. As I said, a lot of mining stocks are in there. So another example would be like Oscar Health that I was talking about, or United Health. Look at those charts, right? Kind of up downtrend and with a little bit of a counter trend rally. Look at United Health versus now look at Cardinal Health, which has been in the 52-week high list day after day after day. Okay, so even within the same group, money is flowing into one stock versus another stock. So my point is just use this. This is a tool in your trading box. I don't know why most people don't use it. They go like they're stuck in the same stocks. Google, Meta, this and that. I'm like, why? There's 10,000 stocks. Open your horizons a little bit. So my suggestion would be create a 52-week high list. Look, there's really is alphabetical. I've created it. I think there's over 100 stocks in there today. And Walmart is one. Like you're going to say, oh, there's unknown names. I'm like, yeah, Walmart is one. Well is in one. Let's look at Well, for example. There's like $4 stocks in here. There's $200 stocks in here. So to me, it's like, I don't know why most people don't use that. It makes your life so much easier as opposed to, oh, now we have some support and then you sell puts on 50 EMA support and then it cracks right through it. And then now you're in deep shit. So to me, it's like higher highs, higher lows, buy high, sell higher, as opposed to anything else. And there's, like I said, I think there's over 100 stocks today making 52-week highs. And then the names have been the same. Because what I'll do now is I'll go put the new ones, new 52 high, it's like breaking out today, and increase the number of stocks in the watch list. And we all know how to create watch lists, hopefully by now. And then just stick with these. Stick with the uptrending stocks. And if you like shorting things, go with the 52-week low list, which is not that difficult either. Okay? So this is the 52-week high list. And let's see how many stocks are going to be in there. On up days, this list it shrinks a little bit, okay, without a question. Here it is. New yearly lows. And there's only these many stocks making no lower lows if you like shorting things. And these are all the stocks that are making 52-week lows while the market's at an all-time high. Okay. Well, you can do both. If you like shorting things, be short these and be long the other ones. I know I'm trying to make it sound simple, but it is really that simple, folks. And then here's a new high list. And even when the market was selling off in April, this list had at least 30, 40 stocks every day in it. Because like Jim says, Mr. Jimbo blocks Sergio, there is stocks making 52-week highs even in the worst bear market. So that'll be the lesson for the day for you guys. The positions are the positions. It's not doing much. I will definitely add into my naked strangles on BMNU. Please check that video out, by the way. It's really going to be good. Because a lot of people don't understand these 2-3x ETFs. They buy and hold them, and they bleed to death. And the two poster children for that is Tesla, TSLL, and MSTU, which is 2x ETF of MSTR. Yeah. I mean, a couple of weeks, 2 to 3 weeks maybe, with selling calls on them and naked strangles and things like that, that's fine. But you buy and hold BMNU, which is 2x ETF of BMNR, for a year, you're going to eat it. You're going to die with it. So that's my 2 cents worth. And I'll go back and answer some more questions and say goodbye to you all and see you guys on Monday. Okay. Okay, so no more questions. Gotta go click the like button for you. Thank you. Please click the like button. You have a great weekend. Also, Brock Capital. One of these days, you need to come on, grab the live stream link, and then we can chit chat in person. I always put the link up, but for some reason, you all are shy. You don't come on. Why not? Let's have a good conversation. Thank you, Doug. Hope you're doing better. So what else? That's about it. You know, keep it simple, stupid. Have conviction. 3 P's rule. I don't know what else to say. Go subscribe to the free newsletter on the website, www.sergioavedian.com, and please share that. I'm really just help me improve financial literacy. It's not going to happen by going to X or whatever. We need to improve financial literacy, one person at a time. We need to convince them that they need to start investing at whatever age they are. This power of compounding is so powerful, man. You don't have to be like me. You don't have to be a jockey trading this, trading that, and going here, going there. Have an investment account. Start investing. Invest. Okay? Please. And then if you like it, please put a thumbs up. Share the links of the videos, which I think we bring out 3 videos a week. Yeah, that's it. I'm going to have a good weekend, hopefully. And let's end with this one. Preach your gospel to my family. Oh, I love you. Thank you. Thank you. Thank you. They need to do it. Just go subscribe to a free newsletter. Why not? It's free. Free is good these days. Not much is free anymore. They need to start. Young ones, especially. Time is on your side. Please, 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 just please invest. We don't care what the market does. Time spent in the market will always outrun time spent timing the market. Not everybody can time the market. I can't time the market. Don't believe anyone that says they know what's going to happen. They draw some squiggly chopstick lines on charts and they think they know what's going to happen tomorrow. Nobody knows what's going to happen tomorrow. That's why investing over long periods of time, passive investing, will always kick active investors' ass. Active investors, what are they? Hedge funds, mutual funds. How come they can't beat the benchmark? 95% of them cannot beat the benchmark. Proof right there. You should have both, though. Have a play account. Maybe you can hit a lotto ticket here and there. You know? But over long periods of time, market will do well. There have been periods of crashes and things. Great. Your dollar cost average at a lower price. It's a powerful tool, man. But please just go talk to your kids about it. Go talk to your family about it. And go subscribe to the newsletter. It's free. Free. Anyway, much love. Have a great weekend. Enjoy Black Friday. I'm not looking forward to going to Best Buy today, but I have to. We'll see you guys on Monday. Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. And we're out. We are out.